So let's see. Okay. Okay, so welcome to this Q&A session, and it's a mixture of two unrelated program or courses. So we're going to be taking some audit questions, taking some Q&A from audits, then taking some Q&A also from management accounting as well in the discussion. So if there are any questions you have. Okay, so welcome to this Q&A session, and it's a mixture of two unrelated. Sorry, my stream is messing me up. Okay, so if there are any specific issues you want me to share my thought on, you can put it in the chat for me or bring it up directly. Then I can raise your hand. I'll bring you up. Then you can ask. Then I talk to you. I share my thought about it. So if there is anything specific you would want me to share my thought on, any specific questions you have for me, you can raise your hand and bring it up or put it in the chat for me so that we begin the discussion quickly, and let me share my thought on some as well in that regard. And then let me also share my screen. Okay, so I see some of you guys joining us as well on YouTube. You are welcome. There's a Q&A on management accounting and advanced audit and assurance for the exams tomorrow. So if there are any specific questions relating to management accounting and advanced audit and assurance that you want me to share my thought on, you put it in the chat for me. For those of you who are joining us on YouTube, and I'll provide you with some answers. And I'm also going to be sharing some few things in the two subjects that we need to really pay attention to tomorrow as we are going into the exam hall ultimately in that case. So if you're on YouTube, you put it in the chat for me. For those of you on Zoom with me here, you raise your hand, I bring you up, or you put it in the chat for me. If you don't want to talk, and then let's get excited about discussion for tonight quickly in that case. Now, like I said, there are two, these are two unrelated subjects, audit and assurance, and then how do we call it? Corporate, management accounting. The only thing that is connected a little bit here is ethics. Okay, even that one, the way we approach ethics in the audit class, in the advanced audit and assurance class, is different from the way we deal with ethics in the management accounting class. So sort of two unrelated subjects, but we're going to just sacrifice and then make it up. So as audit questions come, I'll share my thought on them. And then as management accounting questions come, I'll share my thought on them. So we have a blend. So everybody be on the same page. Then we go away in that particular case. So that is what we want to look at there. Mohammed said, any lectures on reporting? I don't know which reporting you're talking about though, but I think we've done something on that. Mohammed Lamin Kamara said, your Zoom account, please. Unfortunately, Mohammed, our Zoom is for our paid students here. So they are joining us via Zoom because it's their discussion fundamentally. So that's why they are joining us on Zoom, sorry. Then Stephanie Ampofo said, a summary of the methods of transfer pricing. Now, when you say methods of transfer pricing, where are you talking about? What do you mean by methods of transfer pricing? Exactly. What do you mean by that? Which subject are you referring to methods of transfer pricing? Then I can share my thought on that quickly. Irene Kwachi Enin said, please, can you explain the limiting factor and shutdown and the relevant costing? Ayo, Mate. Okay, so let's get excited about it. So far, I'm just getting questions on management accounting. So audit and assurance students, if you're also available, you can put in your question or raise your hand. I bring you up quickly. So Andrew on Zoom said, please summarize pricing for us. Andrew, do you mean pricing decisions? If that is what you're talking about, is it like pricing decisions?
Yes, Nhyira, pricing decision.
Okay. Right. So the issue about pricing decision is one of the short-term decisions that we need to look out for and we need to talk about as a theory going into the exam hall generally. As a theory going to the exam hall. Give me a moment. Let me set this up. Okay, Larry, I see your chart also coming in. I'm going to be looking at that in a moment as well. Okay, so when it comes to pricing decisions, it's a theory area, one of the reading areas that we need to run ourselves into in that particular case. And the issue is that what is going to be happening here is that you have to decide what factors do we take into consideration before we set the pricing decisions. Definitely, there are a number of factors that an entity will take into consideration. Number one, the cost of production generally will be a factor they will consider. Number two, they will consider the markets that they are in, and then the demand of their products respectively. So what is the cost we incur in the production of the goods and services? And then what markets are we in? If we are in a perfect competitive market, then we have to be mindful because there are a lot of buyers and there are a lot of sellers. And then if we increase our price too high, people will switch to our next competitor. So we have to look at the kind of market we are in. If you're in a monopolistic market, it means we can control price and quantity, but not at the same time. So that will guide us on what kind of price we need to also take. Then the demand has to do with the elasticity of our demand. Now, this is if you did some economics, which I know you did in high school, but you ran away from the economics class or something like that. But if the demand of our product is elastic, which means that a small change in price will lead to a more than proportionate change in quantity demanded. So it means if we have a product that has an elastic demand, then we have to be mindful about increasing the price. Because if chances are, if you increase the price by say 10%, you are likely to have a change in the fall in the demand of the product for more than 10%. That means the product has what? An elastic demand. Then we have products that have inelastic demand, meaning that, a change in price doesn't drastically affect our demand. So yes, what markets are we in? What is the demand condition of our product? Is it elastic? Is it inelastic? That must be considered. Then we have to also consider the desired profit level of the entity, desired profit or target profits that the entity wants to have for the period under review. So depending on the desired level of profit that the entity wants to have for the period under review, that will also guide them in the setting of their products. Then certainly some minimum price legislation from the government, or let me put it this way, price legislation generally from the government. So if government passes a law that your prices or your product should be priced at a certain amount, that means you cannot go beyond that or you cannot go below that. Now, the disadvantages of that generally is going to be the fact that people would then end up going into the black market, but we don't care about the outcome of that. But these are some of the factors we consider: the cost of production, the market we are in, the desired profit we have, any price legislation. Now, after we decide that, then there are a couple of pricing techniques that must come in. We have the penetration pricing techniques. Okay. We have the skimming pricing technique. We have the discriminatory pricing technique. And a number of other pricing techniques. So penetration pricing technique is where the entity, then we have the traditional ones, okay, cost plus pricing technique. These are the traditional, the OGs that we're going to be looking out for at the end of the day. Now, under the cost plus, we have the marginal cost plus and then the absorption cost plus. I'm going to explain that to you. Now, penetration pricing simply means that at the introductory stage of the product, we're going to be charging a lower price for the product with the goal that we will command some demand for the product and get some demands coming in at the end of the day. So we flood the market with our product and increase demand with the intent that the more we sell, the more profits that we can make at the end of the day. So the goal of penetration pricing is to increase the demand of our product. It's to increase the demand of our product. So we set a lower price as an introductory price when we are going into the markets relating to that. Then skimming is the opposite of penetration. This is where we charge the highest price at the introductory stage of the product. Okay, the highest price. And the objective of market skimming or skimming pricing is that we want to make the profits as early as possible before competition sets in. Because chances are, once we have introduced our product, people have seen it, they will start copying the product. So we want to make the profit as early as possible, even before competition sets in. So we charge the highest price at the introduction stage of the product. Now, one thing you must understand is that some of these pricing techniques will fail if the entity does not have the right objective or the right understanding of their customers. Because if you introduce a product and you price the product at, say, $1,000, somebody will ask, what the heck give you the right to charge $1,000? Will the people be ready to spend that kind of money? But that is the idea. Market scheming, charging the highest prices. Discriminatory pricing has to do with charging different prices to different category of customers in various market segments. So with discriminatory prices, this is where the entity decides or break down its markets or customers into various segments. So they're going to be selling to people based on their location. They may sell to people based on their agenda. They may sell to people based on their even education level or how affluent they are at the end of the day. So again, if we go back to my products, Nhyira Premium sanitary pad. Now, how much we're going to sell the sanitary pad in Accra is definitely going to be different if we go to my village somewhere in Otuase or Numpulugu or somewhere like that. Why? Because the people there may not have a lot of money at their disposal and cannot spend a lot of money on some of these things. So in such cases, when we go to those locations, we may either sell it at a price lower than the price we will sell it at when we are in Accra. And that is discriminatory pricing. Or we can also sell based on how affluent the people are. There are some people, they want to buy. So based on how affluent they are, we can sell to them. Then the cost plus pricing is what you know already. This is where we set our selling price by looking at adding a markup, a profit markup or a profit margin to the selling price, to the cost price in order for us to arrive at the selling price in that particular case. So basically, when you talk about pricing decisions, the factors that the entity must consider before setting the price, and then the various alternatives that are available for the pricing that the entity can make or can give. So these are some of the things that we can generally say about pricing decisions. One of the factors that we can consider here will be also in the context of the cost of production, we could bring in the concept of relevant costing, where we look at how much cost we actually incur in the production of the product so that we can price at a profit and not to lose the customer at the end of the day. So if you ask about pricing decisions from a theory perspective, which is usually what's the cases, that's what we must understand there in that regard. So Andrew, that's it there. I hope that makes sense for you. I see some of you joining. Okay. I see some of you joining. Please, this is a combined class, auditing and management accounting. They are two opposite things, not related. So for those of you who are doing audits, you raise your hand, I bring you up. If you have a question, then I explain it to you, or you put it in the chat for me, then I explain it to you. If not, as the questions come, you may feel that I'm just on a certain tangent, but it's not my fault. So please, if you have any questions, you raise your hand, I bring you up, or you put it in the chat for me so I can take it. Larry said, working capital and scrap value in relation to discounted payback period. Geez. Oh, in the concept of discounted payback period, really, in the concept of discounted payment. Discounted payback period, really. Hardly will we have the concept of working capital and scrap value. The reason is that scrap value is at the end of the project. Okay, it's at the end of the project. Now, since the scrap value is at the end of the project, when we are dealing with payback, you don't deal with cash flows after you meet the payback period or after the payback period. So even if there is a scrap value in the question, in a discounted payback period, it will not be affected. Does that make sense, Larry? So even if it is in the question and you are calculating, how do we call it? The discounted payback period, the scrap value may not come in because by the time you get to the end of the project, you might have already have the payback period. Now, if you don't have the payback period by the time you get to the end of the project, then that is where the scrap value may come in. So let's say the project has a life of 5 years. Sounds good? So you do your calculation, you do everything. Then you realize that, okay, by the end of the 4th year, you are getting your initial inflow. Then the scrap value is not going to come in. And that is one of the limitations of the payback period, that it does not consider cash flows after the payback period. One of those cash flows is the scrap value. One of those cash flows is the scrap value. Then working capital is also something that is not primarily considered when we are dealing with discounted cash flows as well. Okay, so that is also something that is not primarily considered because, again, chances are the net cash flows, we're going to be having net cash flows coming up or cash flows coming up on the project. Okay, cash flows coming up on the project. And those cash flows will usually be direct cash flows generated from the project. So we may not consider the effect of working capital as well when we are doing the payback period. It is when you are doing the traditional net present value and then the internal rate of return. This is where those two guys you mentioned will definitely be featuring in our calculation or in our computation. But with payback period, you are going to 99.999% of the time not deal with anything like the scrap value in that regard. Does that make sense, please? So that is it for you, Larry, there. George said, okay, George Ampofo said, what? Can you kindly explain what is meant by flex budget? A flex budget is simply a budget that is subject to change based on changes in the output of the organization. So there are two things. We have what we call a fixed budget and then a flex budget. A fixed budget is a budget that remains the same, does not change irrespective of the output level. But a flex budget is a budget that is subject to change based on the change in the output level. So if you ask about flex budget, that is it. That is why, if you remember, in the preparation of the flex budget, we need to determine the budgeted cost per unit. If you remember the question we solved, then you multiply that by the actual unit, and that gives you the flexed results. That gives you the flex result. So a flex budget is a budget that is subject to change based on the actual output or the actual unit produced by the company, based on the actual unit or the actual things produced by the company. So that's George. I hope that makes sense for you for the flex budget there. Then George is all coming up. Please say a comment on public sector audit. Okay, so that is advanced audit and assurance. Now, public sector audit, 99.9% of the time, you're likely to be getting some questions coming in for the advanced audit and assurance students. So you're going to get a question from there. But we made mention of the fact that there are a couple of things that you need to pay attention to, primarily issues about types of public sector auditing. My pencil want to mess me up today. The types of the public sector auditing. We spoke about performance audits. We spoke about compliance audits. And we spoke about financial audits. So these are the three types of audits in the public sector that we need to know about. Now, performance audit is a type of audit that is undertaken after the public sector entity has undertaken an activity. Maybe they just executed a project, okay, or they just finished with a program. So at the end of the day, we want to analyze and find out how did they undertake the project. Now, the objective of performance audit is usually to find out whether value for money was achieved in the procurement of goods and services. Why is my pencil? Give me a moment. Okay, so a performance audit is undertaken with an intent of looking at value for money. That is, did we undertake the project to achieve value for money? Did we procure the goods in accordance with the Public Procurement Act? That is that is performance audit. So it is undertaken after we execute a project or procure goods and services. So like recently, people were complaining about the fact that Ghana shouldn't have celebrated, I don't know, was it our 65th independent or whatever the heck was that? I've forgotten that what was celebrated in Cape Coast. People were asking or saying that the way the economy was, there was no need for us to celebrate that because, I mean, it doesn't bring us anything at the end of the day. Okay, so at the end of the independence, somebody can, or the controller, the auditor general can call an audit into that event. And that will be a performance audit. Which institution organized that? Maybe the special that office of the president or whatever the heck it is. So we want to find out that event, how much the hell did we spend? What is value for money? Did they procure things in accordance with Public Procurement Act? Did some people chop money or put some money into their pockets? That is performance audit. The work you undertook, did you procure the goods and services in accordance with the law? And did you achieve value for money? And definitely, you know, the three elements of value for money. Management accounting students, you need value for money as well because it's in performance measurement when we are dealing with public sector organizations or not-for-profit making organization. If you remember three things we are looking for, economy, procuring goods at the least cost, but most importantly, quality goods, okay? You're not substituting quality for any shoddy, any low price things. So you procure quality goods or quality products at the least cost. Did we achieve that? Number two, efficiency. Efficiency has to do with the outcome of the project, comparing the inputs against the output that we had. So what is the best possible results we got? That is the objective we are looking at, efficiency. Did we get the best possible results from the utilization of resources? Efficiency has to do with whether we achieve the, effectiveness has to do with whether we achieve the intended objective at the end of the day. Did we achieve the intended objective at the end of the day? That is effectiveness. And definitely the concept of equity, whether all people relating to that particular contract, that particular activity that was undertaken were treated fairly or were equally respected or allocated at the end of the day. So in public sector, that is performance audit. Then we have compliance audit. It's where we are finding out whether the institution is abiding or adhering to the various rules and regulations that governs its operation. So the act that establishes them, the directives from the Ministry of Finance and Economic Planning, the Controller Accountant General, and then their own internal controls. Are they complying with it? That is the concept of compliance audit. We want to find out, is the entity legally abiding by the various rules at the end of the day? So for instance, if Ghana is going to procure vaccines, if Ghana is going to procure certain things, if Ghana is going to procure an airplane, a new state airplane for the presidency, like if they procure it or if they procure something like that, did they comply by the laws, by the rules at the end of the day? So that is compliance audit. Is the entity complying with the laws, their own internal controls, the laws and various directives? Then certainly financial audit is like the both world. In financial audits, we are looking at their financial statements and finding out whether the financial statements are prepared in line with the IPSAS, the International Public Sector Accounting Standards, in line with the Constitution, in line with the various acts, in line with the guidelines from the Auditor General and the Controller Accountant General. That is it. So in financial audits, we're going to be having some elements of performance situations, some elements of compliance situations also coming in there at the end of the day. So these are the three types of auditing that we see in the public sector. But certainly we made mention of the fact that when it comes to public sector audits, we must understand that the boss there is the Auditor General. He is the head of the audit service in Ghana. And so we must understand his roles generally. And then we must understand some of the things or contents that may be stated in the reports at the end of the day there. Then certainly we also mentioned that you can look at internal audit agency, the internal audit unit, and then the audit committee, public accounts committee, all these institutions and organizations whose roles are supposed to be known, and whatever, the examiner could throw a question at you in that particular case that you must know about. Then outsourcing in the public sector. Public sector activities could be outsourced. Why would we outsource? Wouldn't the Auditor General Department undertake an audit and a private sector entity will undertake that particular audit? And then the factors that an audit firm would have to take into consideration before accepting an appointment from an audit, from the Auditor General to audit a public sector organization. We have to look at definitely the issue about independence, definitely the issue about our qualification, definitely the issue about the resources that we need, definitely the issue about the purpose of the engagement and the political impact of it at the end of the day. So we have to analyze all of those things. If you remember when the pink sheet situation came in, when I don't know, was that Akufo-Addo went to court? I think is it KPMG also was the one invited, and I think they did that for free, as per my thinking, for the government at the end of the day. So what factors, or for the state, not for the government, but for the state. So what factors will we take into consideration before accepting an appointment to audit a public sector entity? Our independence, our qualification, resources, the purpose for the engagement is important. The purpose for the engagement is very important, and we have to also consider that very well in the public sector audit. So yeah, these are a couple of issues that we must look out for in the public sector audit, and some other things. It's a broad area. I wouldn't want to go into deep, but the types, very important. You make sure you understand them, and then what we do there, and certainly the role of some of these guys, the concept of outsourcing and factors we consider before accepting an engagement. So that is the issue we must understand when we talk about public sector auditing. I see some of you guys joining. You are welcome. This is a combined discussion of management accounting and advanced audit and assurance. Unfortunately, the two papers are not related, so I'm going to be answering the questions as they come. So if you have any questions, please put it in the chat for me or raise your hand. I bring you up. Then you can ask, then I answer, so that you don't get lost. You don't get lost. Okay. Let's see. I'm seeing another comment coming in from Andrew. Please share your thoughts on building block model by Fitzgerald and Moon. Okay, now, so we said that the Fitzgerald and Moon building block is a model that can be used to assess or analyze performance of organizations who are in the service sector. Okay, now service organizations have certain characteristics. We call it like this. I don't know if I can remember them. The S here is simultaneity. Simultaneity simply means that as you are rendering the service, consumption is being undertaken simultaneously. Okay, so as the service is being rendered, so you go to a bar or you go to a restaurant. Once they serve you the meal, you eat in it. Simultaneity. Then heterogeneity. Heterogeneous service organizations are heterogeneous, not mono. homogeneous, they are heterogeneous. It means that they are offering services customized to various individuals that come. I is intangibility. The service is intangible. You cannot touch what I'm teaching now. You can only feel it. It's an emotion you have. It's a satisfaction you have. Then P is perishability. It means that, I mean, you cannot like store the service for future. Now, definitely with technology, you can record and listen to it later on though, but it perishes as we read. The service is rendered, is consumed, boom, it's gone. So perishability. And then T, I think the last thing is T, transferability. You cannot transfer services to someone else. Now, if you bought a phone, like you could transfer the phone to somebody else, but like you cannot transfer service to someone else as well. So these are the features for service organizations. Now, the reason why the service organizations find it difficult to use the other modules for evaluation, like the balance scorecard, is that the balance scorecard usually was made for more manufacturing companies, even though service organizations can use it. So in order to help service organization, Fitzgerald and Moon came together to form the what they call the building block. And the building block is divided into three. We have the dimensions, we have the rewards, the standards, and then we have the rewards. So we made mention of the fact that the dimensions refer to the various aspects of performance measurements that we want to go in for as an organization, various aspects of performance measurement that we want to go in as an organization. And we spoke about 6 aspects of performance measurement that we could look out for if we are assessing an organization's performance, 6 of them to be specific. And that is the charts in here. We spoke about the quality of the product. We spoke about flexibility, innovation, resource utilization, financial performance, and then competitive performance. We said that these 3 guys relates to what is going to happen in the future, whilst the other 3 guys relates to what is going to be happening or what has happened in the past, strategies that have happened in the past and the results that are coming out from those strategies. So the dimensions are the key areas that we are going to be measuring our performance with as an organization. But we said that you cannot set dimensions and go away. You must have key performance indicators under each of those dimensions. The key performance indicators under each of the dimensions are what we refer to as the standards. So for each dimension, there has to be key performance indicators under them. And that is where the standards come in. But we made mention of the fact that when you are setting standards, there are a couple of things you have to take into consideration. 3 things to be specific. That is, standards must be set in a manner that they should be achievable. It should not be too high, not too low, but it should be achievable. 2, somebody should be responsible for the standard. There must be some level of ownership at the end of the day. In other words, the employee should be involved in the setting of the standards at the end of the day. And then certainly there should be equity. It means that the standard should cut across the entire organization and not to one group of employees or the other group of employees at the end of the day. So that is the standards. That is the standard. So dimensions, what aspects of performance measurement are we going to be assessing? And there are 6 aspects we can look at: the quality of our products, flexibility in our production systems, innovation in our production systems, competitive performance. What is the market share we have? How many customers do we have? Do we get more growth in our customers? Financial performance. How profitable are we as a company? Then resource utilization. How efficient and effective are we as an organization in the utilization of our resources? We bring that up. Then certainly every standard must be attached with a reward system. So if you tell me that, hey, Nhyira, I want you to increase sales by 10% this quarter. All right, what do I get in it? What is in it for me at the end of the day? So there must be rewards attached to the standards. So when you have a reward system in place attached to the KPIs, then we can now measure your performance in the dimensions. But there are three things we must know about also as on rewards. Number one, it must be communicated clearly to the people who are going to be receiving it. If you say I should increase sales by 10%, and when I increase sales by 10%, management will decide on something, what the heck is that? You haven't said anything. It should be clear. What am I getting when I increase sales by 10%? So the reward system should be clearly communicated to the people who are involved. But then the reward system has to also motivate the employees. That is where we spoke about the Abraham Maslow's hierarchy of need. For instance, if the person is a newly graduated person from the university with a first degree, or from the technical university with an HND or whatever the heck, chances are 99.9% of the time that person has apartment issues. That person is living with with his or her mother or father or something like that. So if such a person, you promise the person that, okay, if you meet a sales demand, you now come and live in the office bungalow, or you have your own apartment, a 2-bedroom apartment in the cantonments, or I mean, whatever the heck, but you have a good place to live. That will motivate that newly graduated person, because I mean, rent is a serious issue in this part of the world, and especially in Accra at the end of the day. So if you promise that person that it's clear. But if another person who doesn't have problem with rent, then you say, oh, if you increase sales by 10%, we will give you an apartment. What the heck? The person has built his own house, has been in the game for 10 years, has his own family taken care of. What the hell will a house do? That will not be a motivation. Such a person will want maybe a promotion. Okay, a promotion, or probably some share ownership in the company, or maybe some share appreciation rights situations coming in. So that is the issue about that. The motivation, or there must be motivation attached to the reward system. And certainly the rewards or the activity to be executed in order to achieve the rewards should be controlled by the employees. Should be controlled by the employees. You said I should increase sales by 10%. What I would do to get a 10%, that one, don't come and tell me. If you are the one telling me what I should do to get a 10%, then you are controlling the activity. Now, you could be limiting me so that I don't achieve the goal. Then at the end of the day, I will not be motivated. So if the reward system and the activities to achieve the reward system is controlled by the entity, then certainly, by the employees, then certainly they will be able to rally around it and achieve their goals. So if you ask about the Fitzgerald and Moon model, that is what you need to understand. Like I said, it's suitable for service organizations, and service organizations have these characteristics. Funny enough, it's a theory that the examiner can throw at you, characteristics of service organizations for maybe 3 marks or 2 marks, whatever the heck that the examiner want to bring in there in that particular case. So that is the issue about that. Okay. Any other questions for me? Let's see. I got some questions coming in. On YouTube, please, can you throw more light on apportionment and allotment of overheads? I want to see, are there not any audit questions here? All right, audit people, they don't have any question or what? We are seeing who? I'm coming, give me a moment. I'm scanning through my YouTube as well to see if we got some audit questions coming in, then I can take them. Augustine said, to discriminate in terms of price, the elasticity of demand, the market conditions are to be considered. The consumer must not have full knowledge of the two markets. Okay, I think that was about pricing decision situation. Umaru Saul said, hello from Sierra Leone. I love this session. Okay, thank you. Sir, which of the fixed cost is considered in determining transfer prices? I don't understand your question. When you say which of the fixed cost, Umaru, no, that is Kojo Amponsa, sorry. Kojo Amponsa. Please clarify that for me, Kojo, and let me provide you with some answers on that quickly. Irene Kwachi said, please, can you explain limiting factor and shutdown under relevant costing? Okay, I'm going to do that as well. Yes, George.
Sir, the man accounting people are hacking us. When we type it, it's not coming. Look how you are watching the time.
When you type, it's not coming. Why is it that? But when they type, it's coming. Nobody.
They are causing traffic. They are causing traffic on the highway. They are taking everything from us. Sir, please, I'm watching the time. For our own, it's 1.5 hours. Their own is 1 hour. Guess the people have come in. Guess the people who have come in. They are taking everything from us. Sir.
Yeah, that is why I said you pour in your questions and I could be taking it. If I wanted to apportion the time, but then possibly we will not have that time available because I don't know other people's schedule. Because if I say, okay, audit people leave, come back in 1 hour time or whatever the heck, or 2 hours time, I mean, people may go and sleep or something like that. So that's why I'm bundling it together. So once the questions come, I'll be able to handle them as they go so that everybody be on the same page. It's what we have to do generally. Because if we say we will set time aside, we'll go deeper into the night and I wouldn't want to take anybody beyond a certain time. That's why.
They are taking, they are hijacked. Yeah, when we type, it's in traffic. It doesn't come. When we type, it's not
But your question came in the chat.
yes, sir. So they are causing traffic on the main way. When we type, it's not coming.
Okay, so let's see. Any other questions? Okay, Isaac said, please share your thoughts on auditing around the computer and the risks associated with it. If we say auditing around the computer, I don't get it. What is auditing? Are you talking about computer-aided accounting techniques, CATs? Because that is the only thing. If you say auditing around computer, I don't get your question. Or are you talking about CATs, computer-aided accounting techniques? If you're talking about computer-aided accounting techniques, then these are computer softwares and programs used by an auditor in an environment where the entity is more digitized and less paper. And under that, there are 3 things that we must understand. We have what we call audit programs. We have what we call test data. And then we have what we call embedded test facilities. So what the heck is this? Simple. The audit programs are audit software and program that are used to examine and interrogate a client's accounting data. Examine and interrogate a client's accounting data. So these are audit programs. They are audit softwares used to interrogate and examine the client's accounting data. So we go, they have their internal control systems there. We have our audit program. We would pick the data that has been produced and put it in our software. Then we find out, are there any unusual balances? So this is where, for instance, the auditor will be able to program it so that if there are unusual balances, the auditor can identify it. So one of the ways, let me say this, auditors, audit students, listen carefully. You remember that we said one of the risks associated with the auditor is detection risks. And we said one of the reasons for having a detection risk is because of sampling risks. So one of the ways to reduce the sampling risks and ultimately reduce the audit risks is by using the audit programs. Because with the audit programs, we can identify unusual transactions in the client's accounting records or accounting data. We can also identify unusual balances that are remaining at the end of the year. And then we can also identify transactions beyond certain threshold or at certain dates. It's a program. So once it is configured, we can fish out these unusual things. That is what we mean by audit programs. They are used to examine and interrogate the accounting data of the entity. Then we have test data. The test data are used to, like the name suggests, test data. So the test data are usually used to investigate the operations of a client's program. Okay, to investigate the operations of a client's program. So with test data, what we are looking at is we are testing the client's program to see, are they working efficiently or effectively? Are they working efficiently or effectively? That is test data. So if we want to test the internal controls of the company, everything is computerized. So this is where under test data, we'll put in a dummy transaction. Okay, so under test data, we're going to put in a dummy transaction to see if the transaction will go through the internal controls available in the system of the organization. If we put in a dummy transaction and the transaction goes through the internal controls of the entity, then we can conclude and say that the entity has an efficient internal controls. But if we put in a dummy transaction and the transaction doesn't ultimately go through the entire thing, boom, we are in trouble there. It means things are not good in the company. So audit programs for examining and interrogating the client's data so we can identify unusual transactions, unusual balances, specific accounts threshold, then test data to investigate the operations of a client's program or a client's computer system that is in place, and if it is effective or whether it is effective or efficient. Then we have embedded test facilities. These are referred to as, okay, I think the name is embedded audit facilities rather. These are like permanent files that we store on the client's data or client's internal controls, okay, on the client's computer system about information that has been gathered on the efficiency and effectiveness of what? The entity. So it's like a permanent data so that every time we are coming to audit the company, we know that we refer to that data and we'll understand, okay, last year, these were efficient. Last year, these were effective. Then we will retest them again if we have to test them. But it's like a permanent storage. It's like a profile we build about the client's internal controls or its computerized system. So if you ask about computer, like I said, I didn't understand the context of your question, but I took it that you're talking about cards. That is computer-aided accounting techniques. They are used by auditors to audit companies whose environments are structured in such a way that we are just dealing with computer, no paper, and those kind of things. And that is where these three things come in. So know when to use what and what each of them do at the end of the day. Yes, George.
Let me phrase the question for you. He was asking how to audit an online platform, a company who use online platform. The procedures you go through to audit. Hello, sir.
Yes, hello.
Sir, you didn't hear what I said?
No.
I said the question, I'm repeating the question. The procedures that you will
I think your network is breaking us up. Maybe put it in the chat for me. Sorry.
An online platform.
Is it audit procedures for an online platform? Maybe put it in the chat for me. Your thing is, I'm hearing procedure about online platform or something like that. I don't know. I see some of you guys joining. You are welcome. Please, this is a combined discussion. So management accounting, if you have a question, you raise your hand, I bring you up, or you put it in the chat for me. Bring in your question, I answer. Advanced audit and assurance people, if there are any questions you have, you bring it in, then I'll provide you with some answers at the end of the day. So far, I've taken about 2 questions in audit and assurance, and about 2 or 3 questions in management accounting as well. There is another question on my chat here on YouTube. And here, Jonas said, hello, Nhyira, kindly share more insight on the structure of an audit report and what goes into each of the subheadings. You will not be required to prepare an auditor's report, but then the auditor's report that will be prepared will be based, the audit reports that the examiner may ask you is maybe about what opinion you should be giving and or critiquing an extract of the audit reports. Okay, so you will not be asked to prepare an auditor's report. But generally, a traditional auditor's report is going to be starting with the, definitely your heading will come in, the independent auditor's reports, Then you bring in your opinion paragraph, you bring in your basis of opinion paragraph will come in. Now, after this, it depends on the kind of opinion that you are issuing, because sometimes after the basis of opinion paragraph, we may have to bring key audit matters paragraph, emphasis of matter paragraph. So it depends on the kind of audit opinion that you are issuing. But basically, if we are taking those XX out of it, then you will have the opinion paragraph coming in, the basis of opinion paragraph coming in. Then you will have the financial statement that were audited, responsibility of management, responsibility of auditors. It depends on the kind of auditor's report we are preparing. What I would want you to take away about the audit report is how you critique the audit report. Okay, how you critique the audit report. So for instance, you must understand that there is a certain way certain opinion must be examined. So for instance, if we are going to give an adverse opinion, let's say we are giving an except for opinion. So if you give an except for opinion, how should the audit reports be like? Yeah, definitely we'll have our opinion paragraph, but then we will have basis of except for opinion paragraph or basis for adverse opinion paragraph. So it depends on the structure of the opinion that you are expressing and then the kind of the pro forma that you are going to go in. If the auditor seems that there are certain things that happen during the audit which are critical that he has to bring to the understanding of the users of the auditor's report, then key audit matters may be included. So my takeaway with you on the auditor's report is, yeah, knowing headings and whatever it is, it's okay, but you will not be asked to prepare an auditor's report. What you may be asked is, the examiner will bring an extract of the auditor's report, then he will ask you to critique it. So based on your understanding, there are certain, we don't name drop people in the auditor's reports. Then the basis of opinion paragraph cannot come before the opinion paragraph. You cannot bring responsibility of management before the opinion paragraph. So those principles or rules, general guidelines of what an auditor's report should look like is what I think you would have to revisit or look out for when you are looking at the auditor's reports, because necessarily, I mean, you will not be asked to prepare an auditor's report. And so you just have to know why we include certain things. Like I said, opinion paragraph could be there, basis of opinion paragraph could be there, emphasis of matter paragraph will be there, other matters paragraph could be there, but there are reasons why we bring them. Emphasis of matter paragraph is a paragraph included in the auditor's report in which the auditor brings to the understanding of the users of the financial statements items that have appropriately been accounted for by the organization or by management in the financial statements. So it's not that they are wrongly stated. It's not that they are mistake, but the auditor feels that the shareholders must know about it. Those things are recorded in the emphasis of matter paragraph. So like, for instance, maybe there was some management bonus or there was some share-based payment situation. They have treated it well, or there is a related party transaction. Management has disclosed it, has recognized the item very well, but the auditor feels shareholders must know about it. Boom, that will be in the emphasis of matter paragraph. Now, the examiner can ask you what is the difference between an emphasis of matter paragraph and other matter paragraph. The other matter paragraph is a paragraph included in the auditor's report where the auditor brings to the knowledge of the users of financial statements items that are not covered in the financial statement, which in the auditor's opinion, the users must know about it. So whilst the emphasis of matter is looking at things that have been correctly accounted for in the financial statement, which the auditor is bringing to the knowledge of the users, the other matter paragraph is not about anything that has been done in the financial statement. It's just about how we are going to things we think management must know about it. So here could Jonas and then the audit. What I would say is, go through your book, know the format of the auditor's report, but keenly know where why certain things are included. Like the key audit matters like this. It's a paragraph included in the auditor's report in which the auditor brings to the knowledge of the users of the auditor's report significant matters that arose during the audit work, and how they were treated. Significant matters that arose during the audit work and how they were treated. So you must understand issues about it. Now, under the key audit matter, some of the issues could be maybe going concern, assessing going concern. How did the auditor reach with management on that? It could be about specialized transactions that the entity undertook during the year. This was the first time they hadn't done it before. They acquired a business for the first time and goodwill came in. How did they value the goodwill? How was impairment tested? And how did we deal with it as auditors? That could be part of the key audit matters paragraph in that regard. So, like I said, it's about knowing what is reported when, very importantly, because that is where the examiner can get you when it comes to the reporting aspect, which is a minimum of 15 marks, all other things being equal in the exam hall. But if it is excited, it's going to be a 20-mark question because audit reporting is basic. The last thing I'll say about audit reporting also is the opinion that will be expressed based on the issues relating to the evidence that has been gathered or something that has been seen. Modification of auditors' reports depends on two things: the materiality and then the pervasiveness. The materiality and the pervasiveness. Materiality means that the item can change the decision-making ability of the users. Pervasiveness is whether it affects the entire financial statements. So if the thing is material but not pervasive, we may issue maybe an except for audit opinion. If the item is material and pervasive, we may issue an adverse opinion. If the item is material and pervasive, but we are not able to gather sufficient and appropriate evidence, then we may issue a disclaimer opinion. And these are all modification of the auditor's report at the end of the day. These are all modification of the auditor's report at the end of the day. So that's what I would say. I think that was a good question for me to just talk to you again about audit reporting. And that is the issue that you must understand in that regard. So Ahiaku Jonas on YouTube, I hope that makes sense for you in that regard. Let's see if we have other questions coming up quickly. Halima said, summarize the substantive procedures for goodwill, going concern, and trade payables. I think I'm not going to get into that because that is too much for me to go into. But if you check the key principles document we shared with you, you will see those things there. All the procedures, that was the purpose for this document we shared with you. So if you check this document, everything you just asked, it's in this document. So I would just say you go over them. Goodwill. What you just asked, goodwill. These are the procedures here. It's a lot. I cannot go through them, but they are here. So, and there is no way to summarize the procedures. These are the procedures we undertake when we are auditing goodwill. Okay. So I would just say, refer to it. Payable, trade payable. It's here. Refer to it. That's why I told you that this document should become your holy grail, the final document you have with you as audit students as you go into the exam hall. So because everything you're asking it's here. The procedures are here. So Halima, I wouldn't be able to go through them because I mean that's a lot of work, but it's already here. So you can scan, read them. And then if you read something that you don't understand, then maybe I could explain that specifically to you at the end of the day. So all the things you mentioned are available here. So you can just scan, read them from the principal document, which we shared with you. Then Clement said, please, any brief explanation on the perspective of balance scorecard? So we said that there are 4 perspectives of the balance scorecard. So I've taken some audits. Let me take some MA. Otherwise, the MA people, before you know it, they start cursing me in their head. And they start cursing me. My wife will leave me. What should I do? So financial perspective, customer perspective, internal business process perspective, and then learning and innovation. Please note that this question has been asked before by the examiner. Just letting you know. It was a 10-mark question asked by the examiner 3 semesters ago. Now, financial perspective simply has to do with assessing the profitability of the organization. In other words, how do we appear to the shareholders of the company? How do we appear to the shareholders of the company? So this is where we use various profitability ratios or financial indicators ratios to assess the financial performance of the company. And so you may use ROSI, you may use residual income, you may use return on investment, you may use asset turnover, you may use gross profit margin, you may use net profit margin. All these are profitability ratios we use to assess the performance of the organization. Then customer perspective has to do with customer satisfaction. Are our customers satisfied? That is what we try to do. Are our customers satisfied? That is what we try to do. So through customer satisfaction, there are a number of indicators that can be mentioned under customer satisfaction. What is the churn rate? In other words, how many customers came back to buy from us, repeated buying? How many referrals did we receive from our customers? What is the feedback customers gave us from a customer survey? All these are customer satisfaction at the end of the day. But we mentioned that, hey, listen, the only way you can satisfy your customers is if you have an efficient and effective production system or internal controls systems in place. And that is where internal business processes comes in to find out the internal controls of the organizations, whether they are operating efficiently or effectively. So this has to do with the quality of the personnel we have, the softwares we are using, the devices, maybe our production facility we are using. These are all internal controls. The quality of our products, it's also going to be in our internal control system. So how efficient and how effective are we? Learning and innovation has to do with the fact that, hey, listen, you can be good today, but tomorrow you're going to be history because someone else will come and kick you out of the business. So learning and innovation has to do with, is the organization improving upon itself every year? So it could be through research and development. That is learning and innovation. It could be through acquisition of state-of-the-art technology. It could be through training and development of our staff. That is the issue about the balance scorecard. Then we shared some thoughts on the limitations of the balance scorecard. You can go read it. It doesn't consider environmental issues. It is expensive to be undertaken. It does not. It has various measures, and so makes it difficult to be used at the end of the day, and it requires a lot of expertise to be used, and it has a lot of conflicting measures at the end of the day. So these are some limitations. You want to scan read that as well. But one of the things that examiner could bring in the question 1, which is the performance measurement in management accounting, is for us to assess the organization's performance, probably using the balance scorecard. So we know question 1 is going to be under performance measurement. Okay, last semester, transfer pricing and the issue relating to ROI was there. This semester, we don't know what the heck the examiner is going to be bringing, but performance measurements using the balance scorecard is something that like the general performance measurement issue. If you remember, we solved questions relating to WebCo. We solved questions relating to the People Bank. No, we didn't solve that question. It was an assignment. Some people did it and sent it over. I checked it for them. People Bank. So those kind of questions, those may be a structure that the examiner may go by, or whatever the examiner will go. So the balance scorecard linkage with the question one is the examiner could bring us a question where we will use the balance scorecard to assess the organization's performance. In that case, on financial perspective, we need to calculate a couple of ratios, interpret them. On customer perspective, we need to look at how many repeated buyers or buys that we are having, how many referrals we are buying, and the indicators will be clearly stated in the question. Your only problem is sometimes you wouldn't know like which one should be under which perspective or which one. But whatever be the case, if the examiner says you should assess the organization's performance, it could be both financial and then non-financial at the end of the day. And whether you apply the balance scorecard principle or you just go your general way, the way you understand the question and analyze, you go and analyze, and you should be good in that particular case. So if you ask about the balance scorecard, that is what you need to understand. Like I said, the 4 perspective explanation has come like a 10-mark question. And so in addition to that, the limitations of the balance scorecard, and then how the balance scorecard can be used to evaluate the performance of an organization are also some things that you need to pay attention to when it comes to dealing with the balance scorecard. Yes, George.
So, Nhyira, good evening. So, in relation to calculating variance analysis, the mixed variance, the yield, all those things, is there any key takeaway that you like to give us, or any pointers to help us maybe have certain things in mind when we are calculating the variances or working with budgets? Do you have any key takeaways for us?
Right. So when it comes to dealing with variances, basically, the way we know we need to deal with mix and yield variance is when the organization uses more than one input. So when the organization uses more than one material, then quickly the examiner is going to be getting us on the mix and then on the yield variance. And the takeaway we mentioned there was, let me see if I can pull that up. The takeaway we mentioned there was, if you are dealing with a mix variance, it is your actual quantity in standard mix, actual quantity in actual mix, then the difference, then you take it at a standard cost of per material. Now, when we say actual quantity in actual mix, it means the actual materials that you used. The actual materials that you used. So we gave the definitions here. Actual quantity in actual mix. It means the actual quantity that you used. So when you're doing mix variance, you are looking at the difference between the actual materials that you have used and the material you should have used based on your standard mix. So the actual quantity in standard mix is the actual quantity in the standard that you have set for yourself. So in the mix variance, that's what you are looking out for. You bring in the actual material that has been used in your second column, then that total will come in the actual quantity in standard mix. Then you go to the standard cost card to go and pick the per unit guys and use that as the basis to share this total among the individual products. So if it is the mixed variance, like I said, you do the calculation when the entity, or the examiner will ask you that when the entity uses more than one input. Yield is about output. What returns are we getting? And then the yield variance can be in total or can be for the individual materials. And that one too, the way we go about it is we bring in the issue relating to, for the individual product, it is going to be a standard quantity in standard mix. That is, based on the actual unit you produced, how many kilograms should you have used based on your standard? Then you compare that with the actual quantity in standard mix, which you calculated previously in the mixed variance here. So if you ask about the mix and yield variance, that is what you need to understand about the mix and yield variance. We calculate it when the entity is using more than one input. Now, flip side, when the entity is selling more than one output, then the volume variance could be further calculated into what we call the quantity variance and then the mix variance. It works the same way as the material mix and material yield variance, the same concept, the same principle. The same concept, the same principle. Only that if you're in the sales variance and you are calculating the sales volume variance, I told you that what you have to pay attention to is what system is the organization using. If the system is in the marginal costing or the organization using the marginal costing principle, then we will be using the standard contribution. But if the organization is in the absorption costing principle, then you're going to be using what? Standard profit. If the question is quiet, we assume the entity is using the absorption profit. Sorry, the absorption costing. But if the examiner states specifically, then you do specifically what the examiner is saying. So the way you deal with the sales volume variance is based on the system in place by the organization. And if the organization is selling more than one product, then the examiner may ask you to calculate the sales volume profit quantity variance. Like I think I told you some of these things in class, and then the sales volume mix variance. And it has the same idea as the material mix and the material yield variance. The only thing is that here you will be multiplying the difference with either standard contribution if you're in the marginal costing or standard profit if you're in the absorption costing school of thought. So that is the issue you must understand, and that's what I can say about the variance. Then I think we solved a question in class for the reversal approach. That is something that the examiner has really not set questions on. So the reversal approach is also something that the examiner can ask you. Nonetheless, you could go to the exam hall tomorrow and there is no calculation on variance and it's all about theories. So please, the theories in variances, you make sure you go over them pretty well. The reasons why we may have favorable or adverse variances, make sure you go through that. The objectives of variances, very basic. You make sure that you go through that at the end of the day as well. So reasons why we may have this or that, you talk about that. And then the stages in variances, variance analysis, those theories and the variances, make sure you go over them real quick before tomorrow, because you can go to the exam hall and no calculation is there, only theories for 15 marks or 10 marks. And there you will know that the examiner has not shocked you. He just brought everything you like, just that you didn't like the theory part. So that is what I would say about variance in that particular case.
Sure, thank you very much.
All right. Okay, so that is from George there. Let's see. Do I have some audit questions coming up? Please say, how do I get that document? Which document, Isaac? If you're talking about the principal document, it was a document that we uploaded under on the portal under the first video for the advanced audit and assurance students. So it's a document we gave to our students available. So it should be under the first video on advanced audit and assurance under the first video. If you're not enrolled in advanced audit and assurance, then you will not be able to get a document, because I mean, it was given for the students. So it's only available on the portal under the first video. Like I said, audit and assurance students, in addition to ethics, let this document be with you very well, because especially audit procedures, everything about audit procedure, almost everything has been mentioned in this document. Any other questions for me? Let me see. Yes, Clement, your hand is up. Let me bring you up.
Nhyira, please. when you were explaining the mix and yield variance, with regards to the yield variance, what was the difference between the actual mix in standard, actual quantity in standard mix and standard quantity in standard mix?
Standard quantity in standard mix is simply standard quantity in standard mix. That is materials to be used based on actual production, what we should have used. So that one is based on your standard usage per kilogram times the actual units produced. That is the standard quantity in standard mix.
Okay.
Your standard usage per kilogram or per unit multiplied by the actual units produced, respectively.
Okay.
All right. Okay. Let me bring back my slide. Let's see. Good. Okay, good. Any other questions? Let me see my chart here. YouTube say, it is allocated a portion or attributable fixed. Kojo Ponsa say, which of the fixed costs is considered in determining transfer prices? It's specific fixed costs we consider in determining transfer prices. Kojo Amponsa. If it is a specific fixed cost, then we have to consider it because you are determining the relevant cost of producing the product. Then there was a question from a lady that Irene. I don't know if you are still on the chat on YouTube. Explain the limiting factor and shutdown and the relevant costing. All right. Now, short-term decisions management accounting student. We've mentioned that there's a question waiting for you on that. I have said over and over again that the favorite of the examiner has been budget. Did I say budget? Break-even analysis. I mean, for some reason that has been the examiner's favorite. I don't know why he has fallen in love with break-even analysis, but he's in love with break-even analysis. But one of the things in break-even analysis that he has not really spoken about is multiple products. So if you remember, I told you that multiple products in break-even analysis, make sure you go over that. We did it in class. Make sure you go over the notes and then gather your understanding very well because he has been excited about that. We are not saying he's going to bring that this semester. But in addition to that, there is relevant costing analysis. And then from the question that Irene asked, shutdown decision. Now, when making shutdown decisions, we have to look at the relevant cost in that particular case. And the relevant cost is going to be the variable cost that we incur, and then the avoidable cost. The avoidable cost. This is the relevant cost when making the shutdown decision. The variable costs are the costs that we will incur to produce the products that we are seeking to shut down at the end of the day. The avoidable costs are the cost savings that we will have if we should close down that division, the cost that we will no longer incur if we should close down the division in that particular case. So that is going to be the avoidable cost. So those are going to be like specific fixed costs coming in for the period under review, and that will be a cost savings we will no longer incur as an organization. So that will be the relevant cost we consider when we are doing the shutdown decision. But remember, we said there are other theory factors we need to consider before proceeding with the shutdown decision. We need to look at the effect on the morale of the employees. We need to look at the customers' responses. We need to look at whether the product is a complementary product or not complementary product. We have to look at that. Now, the decision rule ultimately is that we're going to be comparing the lost contribution to the avoidable cost. Okay? The lost contribution to the avoidable cost, or if you want, the marginal cost. If we realize that the lost revenue or the lost contribution exceeds that, then we don't shut it down, because sometimes a product can be making losses because of apportionment of general overheads. That is why in the shutdown decision, we will exclude apportionment of general overheads in the making of the shutdown decision. So once we are excluding general overheads, it becomes more clearer for us to make a better decision in that case. Then certainly about limiting factor analysis, one aspect of that that has been hanging in the syllabus is the throughput accounting ratio. And it is also a model of evaluation, if you remember that. So throughput accounting, it's something that examiner has been a bit relaxed on, but it's a concept we must understand. If you remember, we distinguish between throughput accounting and then the marginal costing principle. We mentioned that in throughput accounting, our objective is to maximize the throughput, which is the selling price minus direct material cost, because the assumption under throughput is that the only cost that is variable in the short term is direct material cost. All other costs are treated as factory cost. So under throughput accounting, your factory cost is direct labor cost plus factory overheads. Those becomes the factory cost. But in the marginal costing, our objective is to maximize contribution. And you know already we said contribution is equal to selling price minus variable cost. The variable cost here includes both production variable cost and non-production variable cost. Then certainly the various computations that can be done under the throughput accounting ratio, and also the ways through which the throughput accounting can be improved by the entity. All of those theories and all of those things are issues that you need to take into consideration as well in the context of your question that you are asking at the end of the day. So when we are looking at throughput accounting, the limiting factor decision can be made using the throughput concept or using the marginal costing concept. Usually, the default treatment is the marginal costing. When we look at the contribution we are getting, then we can rank the product, determine the optimum production output, and then we can continue to sell our product at the end of the day. So that is the issue about that. And that was a question coming in on YouTube by Irene. I hope that makes sense for you. Let's see, do I have any other questions coming up for me here? Okay, George on Zoom said, an excerpt on audit evidence and audit planning. Audit evidence, we have mentioned that the auditor needs to gather sufficient and appropriate audit evidence. Again, we've shared our thoughts on this pretty well, and it's available as well in the principal documents, audit evidence, clearly stated here. The various things that you must understand. Just want to see if I can pick it up and bring it up. 21. So what we mentioned there about audit evidence is that sufficient means enough evidence. Appropriate means that we are looking at the reliability and relevance of the audit evidence. And we gave some criteria for determining the reliability of an audit evidence, and they are listed there. Oral evidence, documented evidence is more reliable than oral evidence. Evidence provided by an expert is more reliable than evidence generated by the entity. Evidence that are original or original documents are more reliable than photocopy documents. Evidence obtained by the auditor himself or herself, it's more reliable than evidence provided by the client entity. So these are the issue that guides us on determination of the reliability of audit evidence, if you ask about that. So is it enough? Sufficiency. Is it reliable? Is it relevant? Appropriateness. Once these two are present, we can conclude and say that, boom, we have gathered the evidence we need, and we can reach a conclusive, we can reach a reasonable conclusion at the end of the day. Audit planning, that's a broad scope. I don't know what exactly under audit planning, because of audit planning is a broad, very broad scope. I don't know what exactly I need to talk about that. But the issue basically that is critical about audit planning has to do with the audit approach that we use, which we go through balance sheet audits, system audits, risk-based audits, and those things. Then the concept of materiality, very important, because we are going to be undertaking audit evidence we are going to undertake audit procedures almost always. But before you perform the audit procedures, you may have to determine the materiality of the evidence. Again, if you go, materiality of the event. Again, if you go to our principal document, the issue about materiality has been explained in the principal document, and the threshold of materiality. Please make sure you memorize that. As audit students, make sure you memorize that, because the examiner may not provide it to you, but he may give you the way you know you have to calculate or determine materiality before you write the audit procedure is if the examiner gives you profit before tax figure. So if we have profit before tax in the question, or the examiner gives you the net asset or total assets or revenue, then you know you have to calculate materiality before you write out your audit procedures. So the materiality thresholds, I will entreat you to make sure you remember them very well. If the examiner does not give them to you, so that you'll be in a position to be able to do well generally at the end of the day. So that is what you need to understand about audit planning. I mean, the two key things will be the audit approaches and most importantly, materiality. Most importantly, materiality, because it's a broader scope. If there is anything specific there you want me to talk about also, then you can contextualize, then I will talk about it in that case. Okay, any other questions for me, please? You raise your hand, I bring you up, or you put it in the chat for me, then I provide you with some answers. Let me see if I have dealt with everything that is in my chart here. Yeah, I've done public sector audit, I've done flex budgets, I've dealt with working capital situation. Okay. 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 So if there are no other questions, generally for me, then I'll make my final submissions and then we will be out of here and go away. And I'm going to start with management accounting. Then from there, I'll go to advanced audit and assurance. Then we should be out of here. Management accounting, we have mentioned that our exams is going to be approximately between 35% to 65% theory and computation in the exam, or theory or comment questions in the exam, or generally. For that reason, I have mentioned to you that you go in there and answer all the theories first as much as you can at the beginning. We know there may be a 5 or 10 mark question, but there is a between 5 or 10 mark question on ethics that the examiner will bring to us. He has brought a 10 mark question before in ethics, but last semester he did only 5. So between 5 to 10 mark question on ethics, we are going to be having that in the theory that we need to understand. Then the models of evaluation, I have mentioned to you issues about that. The concept of total quality management, it's something the examiner hasn't shared his thought on, just-in-time system, and all of the other ones we shared with you. Make sure you read through them and you understand them pretty well. The distinction between cost control and cost reduction, make sure you understand these things very well. So ethics, model of evaluation. Then there are theories in investment appraisal. If the examiner brings any, take it out. There are theories in budgeting. If the examiner brings any, take it out. There are theories in variance analysis. If the examiner brings any, take it out. There are theories in performance measurement. If there's whatever theory it is, take out the theories first. Take out the theories first. So that is the first thing that we must understand. There's going to be theories in the exam hall. You want to take those things out as soon as possible, as early as possible when you get to the exam hall. Then question 1 is going to be a very intense question, because that is where the examiner is going to be sharing his thought on performance measurements. I want you to take your time to read the question very well to understand the requirements of what the heck the examiner is asking you. Maybe it is about performance measurement for the entire organization. So you calculate some ratios and then you interpret the ratios. Wow, that's good. Clap for the examiner, and then you go away. So make sure you go over your ratios, understand them very well. Then it could also be a performance measurement where you are using both financial and non-financial indicators to assess the overall performance of the organization. Whatever be the case, go for it. Go for it. So you want to read that question very well before you go in there. So during your 15 minutes reading time, you do your calculations pretty well. Sorry, you read the questions pretty well to find out, because question 1 we know is on performance measurement. Again, there is issues about transfer pricing there. Last semester I was there. I don't know if the examiner will be excited to repeat transfer pricing again, whatever be the case. All I'm saying is that in the question 1A aspect, it's performance measurement, and it's going to be demanding. It's going to be demanding. So if I were you, I would stay away from that question in the beginning, because it is almost always demanding. Almost always demanding. So it's there, but you want to read it in the 15 minutes reading time and to understand what the heck is going on. If you feel you can do it as quickly as possible, fine. After your theories, you can take it. If you feel that this is going to require a lot of time, a lot of thinking, a lot of writing, a lot of English, a lot of grammar, a lot of calculations, better put it somewhere. Go do something else. Go do something else. Then suddenly we know that there is going to be a question in the exam hall relating to something about variance. Maybe the examiner will bring theory, will bring calculation. We've mentioned the issues about variance. Then budgeting. Then your investment appraisal. Please note, I have told you that if the examiner asks you internal rate of return, another name for that is the break-even rate. Another name for that is the rate at which NPV is going to be what? 0. Per the examiner, I mean, he has been excited a lot about the net present value, but learn the other methods, because all the methods of evaluation have been asked by the examiner. So don't just focus on one method and say, oh, I'm a master here. No. You got to be a master in all of the methods. But most importantly, the theories in the methods you have to understand. The merits, the demerits, the limitations of using which methods, because the examiner could also ask you those questions, and you need to be mindful to be able to understand those very well as you go into the exam hall. So what am I saying in a nutshell? What I'm saying here is that when you get to the exam or management accounting, read the questions well. Read the questions well. 15 minutes reading time may not be enough. So when the examiner says start work, don't even start work. The examiner says start work, don't even start, because probably you have not finished reading the questions. But take another 5 minutes, maybe use 20 minutes or 25 minutes to read the questions, understand, plan out your answer, which one you go for, plan your offense, your defense, and know what the heck you're getting yourself into. Do not start with a question you think you can do and later on realize that, Jay, what did I do to myself? Because when you start panicking in the exam hall, you're on the way of failure. So take your time, read through the questions. You know already your grammar will get you under budgeting. You know already your grammar may get you under variances. You know already your grammar may get you under performance measurements. So for those of you who don't understand English or who have problem in understanding English in management accounting, I don't know what you're going to do, but we pray for you that when you read it, you will understand the meaning of the grammar that the examiner is speaking. So that is why it requires time to read the questions. Chances are many of you will not take time to read the questions because you feel reading the questions is a waste of time. I don't know why some people have that idea. Oh, the question is too lengthy and the time is going. So if you're answering, what are you answering? So please, yes, some of the questions will be lengthy, but read each of the lines and interpret them well. So if you start with the theories, take away all the theories, go to the computations, start with what you can do best first, and then you should set yourself up to go. Yeah, you will not be able to solve all the questions. That you have to get yourself used to it. You will not be able to solve all the 5 questions. We pray you are able to attempt all the 5 questions, but we got to be realistic. You cannot solve all the questions. That is why to optimize yourself, answer the theories first and start with what you can do best first. I believe with all intents and purposes that if you should do what you are being told to do, take time to read the questions, start with what you can do best first, do the theories first, you should have an upper hand to be able to pass the examination. Like I said, the question 1, be mindful. Maybe stay away from that in the beginning. If you read it and you realize that, geez, this thing, sometimes it will be an easy question, boom, go for it. After your theories, you can go for it. But if you realize that it may require work, Ms. Reo, I beg you, put it aside. Put it aside. And if you pick a question and realize that in the middle it is wasting your time, just stop it and go to something else. And go to something else. Because if you pick a question, every question you're supposed to spend 36 minutes. So you pick a question and that is the B aspect of the question, and you spend 40 minutes on the question, please, you're likely to go to the failure school, which we don't want. So allocate time very well and make sure that you answer the questions in the order that they are supposed to be answered generally at the end of the day. So that is basically the overview of what I want you to take, management accounting, as you go generally into the exams for tomorrow day, for tomorrow. Read the questions well, take away all the theories, optimize your marks, and go away. The objective is to get free marks. So as you read the questions, ask yourself, which one can I do faster to get some marks? Which one can I do faster to get the marks? Not what you want to, like, you are not there to impress anybody. You are not there to impress anybody. It's the easy marks you pick, the little mark, 2, 1, 3, 1.5, 0.5, that these are going to be adding up cumulatively to help you to pass the examination. Advanced audit and assurance students, straight up. Your paper doesn't have any formula. I'm sorry. It has a formula. Your paper doesn't have any computations, all other things being equal. But there is a computation you can do if the examiner asks you to carry out audit procedures and there are financial statements available and you want to do analytical procedures. Because if you want to do analytical procedures, you have to do some calculation. If you remember, we solved a question like that in class where we calculated a number of ratios so that we can determine the going concern of the entity. So yes, even though it's not a calculation question or exams, go to the exam hall with your calculators. Go to the exam hall with your calculators, because maybe there is like the question we solved in class where we are assessing the going concern of the entity and we have to do analytical procedures. We did a couple of calculations. So you don't get there and say, oh, babe, I didn't bring calculator. Then you are borrowing calculator and disturbing people in the exam hall and causing people to go and fail the exams. If you are failing alone, fail alone and go away. So go to the exam hall with your calculators. Once you go to the exam with your calculators, read the questions well. Yes, minimum of 10 marks on ethics. It's going to be easy on you. Make sure you take it out. But remember the way the ethics questions are answered in advanced audit and assurance. Remember, we identify the threats. You look at the significance of the threats. Then you find safeguards for the threats. You identify the threats, significance of the threats, then you identify the safeguards that can be put. Please note, when you're dealing with ethical issues, they are on 2 levels. It could be on the whole firm, the audit firm level, or it could be on the individual level. The way you answer the question will be different. If you're dealing with ethical issues for the overall company, the approach is different. If you're dealing with it for the individual companies also, the approach is going to be different. So that is one thing that you must also pay attention to. So the ethics question, you make sure you take it out and you go in there in that case. Then certainly you're going to be having questions relating to audit procedures. And like I mentioned, almost all the audit procedures have been explained in our principal document here. Almost all the activities that we may be asked to write audit procedures on has been given here, and the sample audit procedures have been given. So all you do is understand them, then you contextualize them in a question that is provided to you at the end of the day. So we know something about audit procedures. We'll be there. Read the questions and understand the context of the question, and then write it out. On the overall, just like what I said in management accounting, take more time to read all the questions and understand the requirements of the questions and start with what you can do best first. Again, your handwriting, your grammar, your presentation, and all that will be affecting you. Make sure that you are in a good position to be able to handle all that at the end of the day. So basically, that is what I would say. also about audit and assurance. Everything else we've mentioned it. There is something relating to materiality. There is something relating to ethics. There's something relating to audit procedure. There is something relating to reporting. And I've given you the guidelines and the blueprints of all that. On the overall, make sure that the morning before you finish and say, hey, I'm done with my audits, you go through the principal documents that we shared with you, because this principal document will serve as a guide for you for many of the things that the examiner will be throwing at you, inclusive of the auditing at the end of the day. And note, when you're writing your audit procedures, be mindful of the language. Don't suggest. Don't make suggestions. Go straight to the point and write what has to be written generally at the end of the day. So that is what I would say on the overall when we talk about issues relating to the advanced audit and assurance as well. Once you fix your handwriting, your grammar, your presentation, take time to read the questions well to understand exactly what is going on. All other things being equal, you should be able to write well and then pass the examination. Please take note of the thing that be precise. And this goes to management accounting students as well. Limit, some of you, like, I don't know, you get excited and you are writing plenty. No. Be mindful. How much is too much? Like, you're a professional. You did summary in high school, unless otherwise you didn't attend a good high school. But you did summary in high school and probably first degree. You did summary there if you did anything English in your first degree. So learn to summarize. And the principle of summary is you bring out the salient points and you keep it brief. So don't write essay. Don't write essay. So be concise, be precise, but it should be detailed enough to provide the answer to the question. And that will be judgmental. That will be judgmental. So just keep yourself in a posture that you don't write too much for the written part of the question, especially the ethics and those other part, the audit procedures. Like, keep your posture so you write within the reasonable time so that you don't spend more time on the theory than you are supposed to spend. Because the purpose of you answering the theory first is to save some time so that you can come and do the calculations or the other parts of the questions for the management accounting students. So that is the issue about that. And that is what I will say there. And that is where I'm going to be ending here today as we conclude on this for you to go in the exam hall. Like I said, whatever it is that has to be said has been said. And then whatever you wanted your thoughts on has also been shared with you. The other students, make sure you pay attention to everything that I've told you in the class, and also make sure that you go over the documents we shared with you, especially on the audit procedures, quality control, ethics, like these things, and then reporting, the principle about modification of the auditor's report and all that, issues about going concern. Make sure you go over those things very well because these things are going to be replicated in the exam hall. And once you read the questions well, you understand the question well, you should be able to pass the exams at the end of the day with that. So that'll be all about that for today. Let me see. Kojo Ponsa said, are you allowed to answer the theories of a particular question and skip to another question, then follow up with the previous question? The issue is you answer each question on a fresh page. That's the concept. So if it is question 2B, that is a theory you want to answer, fresh page, question 2B, answer it. Then question 4A is another theory you want to answer, flip, fresh page, question 4A, answer. Make sure you are answering each question on a fresh page. That is the only rule. That is the only rule. Once you are answering each question on a fresh page and you are not bringing question 4B under question 2A, you are going to be good. You're going to be good. So answer the questions or each questions on a fresh page, and you should be good in relation to how you approach the exam. So that was on YouTube from Kojo Amponsa there. So that is it. You are allowed to do that, but make sure you are answering each question on a fresh page. Okay, so that is it about that. And yeah, George.
Yeah, I have a question in relation to man accounting. So
Right.
let's say you are solving a question on MPV, and then you make a mistake with one of the figures before arriving at the present value of the cash flows, right? So when do you have any idea when the marking is going on? Does it mean at that point everything becomes wrong, or the steps are marked and then the final answer is wrong?
Geez. Yeah, individually you will get some of the marks coming in. Like individually you get some of the marks coming in, but ultimately you get a lot of the things wrong because probably let's say maybe you didn't apply the inflation well. So your sales figure is wrong. So definitely your cost, maybe your variable cost, that one will be marked. But that means your net cash flows will be wrong. That means your tax figure will be wrong. And so your net present value will be wrong. So like you're likely to lose a lot of marks. So on a tick individually, on the tick individually, you may get some marks, but because that calculation has an effect on your tax, on your net cash flows, on the MPV, you're going to lose all those marks. You're going to lose all those marks. So to avoid that, all I will say is when you are punching, you just take your time. That is why I always say that when they say get ready to stop work, or like at a point, you can just repunch and then make sure you format your calculators when you start your work and you know how to do your format. If you are using the Mokola calculator, I don't know how the heck that is done. But if you are using this calculator, you format it before you start. Then in the middle, you format it again, because sometimes the calculator's memory can be messing you up. Then you're punching something, then it's giving you some figures. In your brain, that is the correct figure, but you may be doing non-fankwa. So just take your time on the punching because it could affect you. It could affect you. If it makes one punch, like it could affect a lot of things at the end of the day. So you just have to be mindful of that. You just have to be mindful of that.
Thank you. Nhyira, how do you format the calculator, please? Can you just walk us through?
Oh, it's just shift this one, shift 9, 3, and then equal to, then you are good. Shift 9, 3 equal to, then you are good. But I understand some of you are OGs, so you use the Mokola calculator. Sorry, I don't have Mokola calculator. So use Mokola calculator. So I don't know how Mokola calculator is formatted. You'll be punching, bang, 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 be making noise in the exam and disturb people. Why? I don't want professor now. So that's it about that. Thank you very much for this, and we wish you all the best as you go into the exam hall. Like I said, whatever be the case, we've shared our thoughts on it. You want to slow down, just make sure you digest and go over everything that has been said pretty well. Make sure you comfortably figure out and pick out the various things that has to be picked out. Start with what you can do best first, and you should be good. The goal is not to answer all the questions because you cannot. So once you understand that I cannot answer all the questions, but how many can I answer as much as possible, you will be good to pass the examination. So we wish you all the best. And for those of you doing principles of taxation and advanced taxation, we will come back tomorrow. And tomorrow it will be fun because taxation. So that one, it's a more swag and more clicking. So tomorrow, principles of tax, advanced tax people, we will be meeting and we will see. So all the best. Go and sleep and rest well.